All right, so we closed like a couple points above the MM's expected move for the day. Not too much though. A little bit better than yesterday. So things are starting to line up a bit better. I realized Vol's still going to go up, but we'll see. Decent rejection there at the end of the day on the second test of the upside trend. Support here should be at 61.13 ES. If that fails, that'll open up a retest at 60.78, which we struggled with a bit yesterday, but not too much. Dollar up for the most part today. We're starting to see yields turn around after they bottomed out following the inauguration. The 20-year still ended up moving up on the day, despite the auction not having a tail. It was a small auction with very little primary dealer interest. Commodities moved up, not on the energy side though. It looks mostly like precious metals and iron ore. Correlation continued to drive a little bit lower, and we're actually seeing correlation get pushed a little bit harder than we did back in Jan, like early Jan, more along the lines of kind of where we were down in late December, around the time of like this quote unquote Santa rally. Leverage on the carry is still floating around about 9x on the 10-year, 7.3 on the 6-month, and 7.28 on the 3-month. Forward yield on volatility has continued to drive down, ending the day negative 10%. Bond volatility picked up a little bit yesterday. Might see it pick up a little bit more today with the bump in yields. We're not seeing correlation on the 3-month turnaround yet, but we'll probably see that a little bit before we see bond vol spike. We don't have any data coming out anytime soon that's really going to play a big role for bonds, except the Bank of Japan decision. So I wouldn't expect volatility to be too high. Skew bounced back, getting close back to that prior all-time high again. Definitely a lot of puts being sold, or at least not a lot of out of the money puts being bought right now. Kind of actually interested to see if this one comes down tonight. That'd be maybe mark a top if we start to see people picking up a lot of put hedges here. 80.31% of the S&P above its 90-day moving average, and we continue to see volatility correlation between VX and cash VIX rise, now at 85%, definitely statistically relevant. And even more interesting is despite the upside move today, we saw a rise in VX, VIX 3-month, and VIX itself. So what we might be getting here, as that correlation keeps increasing, is we might be starting to see the short vol position pull back, right? Remember, when they short vol really heavily, correlation breaks apart. When they start closing their short volatility positions, correlation picks up. And if the brief bump that we saw in the options macro of increased put selling is starting to wind off, that'll open up upside moves in volatility and downside moves in the index. Fed fund futures still 0.15-ish. It doesn't matter. 10 2-year spread picked up again today, starting to bear steepen once again, back above 30. Definitely not as high as we were about a week ago, but we are seeing the bear steepener continue. And then last but not least, I guess that doesn't matter. Let's take a look at the technicals. We got a test at the all-time high, and we actually formed a slightly newer high. But a rejection here is actually not a good thing. And we did fully reject from that test. I would like to see a breakdown in the 60-40 range to kind of confirm that. Maybe, yeah, we almost lost that too. Maybe like 60-73. That was a pretty important prior level. Like right there. Just kind of arbitrary as a confirm. But when pushing for a new all-time high like this, you generally want it to break out, not get rejected. If it gets rejected, you get a double top, first of all, which is not bullish. And a double top here on this time frame could lead to fairly significant drawdown. So not only has the upside here been extraordinarily illiquid and gappy, but now it's rejecting off the all-time high tests. I don't like the look of this. This looks bearish as consistent bullish returns aren't generally very gappy. They might kick off on a gap, but then like you don't usually get a lot of continued gaps to the upside, right? You get steady, consistent price improvement. This has just been one gap after another for like 5 days now. And that's an awful lot of illiquidity for everyone being bullish, right? If everyone's bullish, there should be tons of liquidity. We shouldn't be needing to gap over all of the resistances. Not fake, just realized on far less buying than it normally would be. Like, I mean, if you look at this on, if I go to a lower time frame where you can see the gaps better, like out here, this is a bit concerning, right? We basically, almost every day besides yesterday, we just gap up and close flat. And even yesterday's like intraday gain wasn't very impressive. So yeah, I mean, well, you don't like this, I mean, because there's no volume traded in these ranges, right? So there's no like supports here. So if price were to fall, price can just gap right through those again. When are they going to be done crushing vol? Well, I assume when they start buying puts, right? Nothing better than those being cheap. But you'll notice that something like this really gappy market behavior, is generally symptomatic of something like bearish, like a bearish recovery, like really bearish. Hold on, I probably have to go way the back to find one that's almost equivalently all over the place. Maybe we had a few back in like 2022. Even that filled back in on the gaps. This, I don't know if you guys remember this rally. I know a lot of you got burned on it. But this rally back in August of 2022, before the market bombed, this had a lot of that kind of price action. And even this was more liquid, right? Like we'd gap up and then the next day we'd fill the gap, move up, fill, right? This had a lot of gaps, but not nearly as many as we have right now, or nor as wide. And then maybe maybe COVID. This part, like right before the COVID crash, this was gappy as fuck. Because see, what happens is once you start filling those to the downside, you can just gap over everything, right? Because there's no trade volume in here. There's nothing being netted out. It just dumps through it. I'm gonna buy puts overnight, every night. I mean, just be aware of the behavior is not particularly bullish. There still confirms to the downside if you want to buy puts. I would definitely wait till we're below gamma neutral. That's the other thing, is like GN on both options chains hasn't moved at all. It's just flat, despite price going up way above it. It's just flat as fuck. I remember that drop. Puts were DOA the day prior. Woke up to 100x. I need more of those days. Yeah, puts are not cheap if gaps keep gapping up for another week. No, they're not even that cheap, to be honest. I mean, even longer dated puts. Shorter dated puts aren't too expensive right now, but they're not cheap by any means. They're just slightly below average price. And then 3 months out, puts are still expensive. Ooh, futures is kind of dumping hard as fuck. Wait, where did we close? Did we close at the bottom of that? I guess futures is just still dumping. Yeah, futures loses 113 tonight. That's going to be a little bit bearish. Alright, anyway, I'll see you guys tomorrow. Later.